Hey everybody, what's going on? It is James here, and I wanted to sit down and shoot a Bitcoin video. It's not really going to be a market update. I want to do some trading lesson stuff. So we're going to talk about Bitcoin. We're going to talk about understanding supply and demand and how to find trades that you might want to take on any asset, whether it be Bitcoin, another cryptocurrency, the stock market, Forex, etc. All right, so today is August 5th. Before I jump into the video, please do me a huge favor. Hit that thumbs up button. Make sure to subscribe to the channel if you have not already. And don't forget to check the description for a link where you can join my Pancake Profits course that teaches people how to trade DeFi tokens, what to look for, how to avoid rug pulls, how to avoid honeypots, all that good stuff. Also, before I jump into the content, please remember that I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, or precious metals. If I'm taking a look at this chart, this is a 1 hour chart on Bitcoin. So why would you want to take a long position down here on Bitcoin, right? If you look at this on a daily chart, here it failed this trend line up here. Draw that trend line real quick. Tested it, fell right off of it. So why would you want to be getting long? It looks like it's bearish, right? Wrong. What happened here is Bitcoin went up, tested that trend line. It's completely normal to get a bounce off of a trend line, right? And then you kind of have to wait and see, is this going to, hold up? Is it going to really fall off of it? Or is it just a temporary setback before moving higher? You'll see the same thing with horizontal and support and resistance. For example, if we look at this on a weekly chart real quick, watch this. When it got to the all-time high, right? Watch. Highest close in weekly history at that point was 19.3K. If we zoom into a daily chart, watch what happened when it got to 19.3K. See it? Came up, tapped it, was rejected off of it, came up again, consolidated underneath it, built up the momentum and strength it needed, and then blasted through that. So that's very, very typical market behavior. What happens with a lot of new traders is they see it start to get rejected and they think, okay, I'm going to go short here, right? Or if it's support and it bounces off of a little bit, they get long. The reality is the first time it touches it, and when I say first time, it depends, whether you're talking about horizontal or a trend line. When I'm talking about a trend line, it's really the third time, right? Because you don't have a trend line until it's touched twice. So the first time it tests an established trend line, or the third touch, if you will, right? You're normally going to get a reaction off of that. But you have to understand that that initial reaction is normally a scalp play, right? And I did a video about this last week saying, look, even though it, in hindsight, we could say it worked out, it dropped like 10% or whatever it was, I really didn't see a short here. Right? I had one reason for a short, which was, testing that trend line, but I didn't have enough other reasons to back up the short. So I was not able to scalp this, unfortunately. So long story short, it bounced off of that, it comes down. So when it's moving down like this, right, there's no reason to really have a bias at this point, not long and not short, because yes, this could actually be a true rejection. And yes, this can continue going way down. That's possible, but it's also completely normal to get that initial bounce back off of it, or that initial pushback, okay, which is what this ended up being. So I would be kind of neutral seeing something like this. So what I would be doing is looking at the smaller time frames to give me an idea of whether I wanted to be long or short. And if we're looking at an hourly chart, right, back here the thing was moving up strong. This was yesterday, okay, but you expect some type of pullback on a move that's kind of that impulsive, if you will. So it moves up, you're looking for a pullback. Maybe you could have started looking for some longs in here somewhere, but not a whole lot of reason to get long through here. It's moving sideways, it breaks down, and you could almost say there was a reason for a short, but that's a whole other lesson, so we're not going to get into it. Essentially what I'm looking for is tails and wicks to kind of paint a picture for me. Right? So when this falls down, it puts in a tail. Okay, so here's a little bit of demand here, but the next candle takes the tail out. All right, obviously not that much demand. Another tail, but it gets taken out. A tiny little tail, not worth anything. Tiny little tail, not worth anything. But here you go. Look at this. Now there's a tail that's basically moving sideways, right? Which you could say is consolidation. Here's another candle that's basically an inside candle, didn't take out the high or the low of the previous candle. So right now what you're seeing Okay, you're seeing an equal amount of supply and demand. So we're still waiting. We're still waiting for some type of signal or some kind of, breakout of this range that's forming down here. Next thing you know, you get this big green wick here, and this candle here is kind of a reversal candle, okay? Because what it says that bears tried to push this down, but bulls stepped up in a big way. If I put volume on here, I would almost bet money there's an uptick in volume on this candle. Let's check. Yeah, see this? You have like fairly small sell volume, and then all of a sudden this larger green candle here. That's two reasons for a long, guys. That's two different reasons. You have this range forming, you have basically a dip outside of the range, and then immediately push back inside the range. That's showing strength on one side. If it was a wick pushing down, then it would be strength on the bearish side. If it's a tail pushing up, it's bull strength, right? And then we have an uptick in volume. Now, this is an uptick in volume at the bottom of a move, and it's buying volume. Those are two reasons for a long. So what you can do right there, if you're aggressive, right there you can get long on this asset, and it would look something like this. You would take a long position on the close of that candle. You would put your stop loss down at the bottom of the tail. Why? Because obviously if bears are able to take out this tail, then that demand has failed. There wasn't as much demand as what the chart was telling us there was. So there's your stop loss, 1.93%. So if you're trading with a 2-to-1 risk reward, which is the minimum that you should be trading with, right? Then you're going to pull this up for almost 4% profit target. In this case, about 3.85%. And there's your trade, just like that. So you'd be long at 8 a.m. Central Time, and you'd hit your profit target within about 4 hours. Done, right? Almost 2%. So let's say, for example, just quick math, 1.93%. Let's say that you have, I don't know, let's say you're risking, well, TradingView is acting up. It's not letting me edit the text. I know why. All right, so let's say that you have a $10,000 trade fund. Just using nice, easy math here. Let's say you got a 3% risk tolerance. I'm a big believer in 1%. Let's say, and now let's do 1% because that's really what I think is more realistic. I don't like people risking a lot of money until they know their numbers. So let's say you're risking 1%, right? Your stop loss is 1.93%. So 1% of 10 grand, $100 risk, $100 risk divided by 0.0193 because that's the stop loss. Your position size equals, so all I did was take $100 divided by 0.0193, and that gives me a position size of $5,181. So $5,181. And of course, if you closed it right at profit target, 3.85%. So 5181 times, and we're not going to worry about fees in this example. Of course, fees matter and you should always pay attention to them, but for easy math, $199. I don't know why I did that. I should have known what that was going to be. Duh, 2-to-1, $100 times 2, roughly $200, okay? All right, so there you go. There's your trade. That's what that would look like. You know, if you're trading with 3% risk and you got 10 grand, then you have $300 risk, and your reward would be $600 in that trade. If you're trading with a $100,000 budget, things start to get a little bit different because obviously you have slippage and things, but essentially the same general idea, okay? So there you go. That's literally how that works. And all it really is, it's not about having a magical system. It's not about having crystal balls or any of that stuff, because this here doesn't tell me if Bitcoin's going to 100,000 or zero. All this tells me is that in the short term, people were interested in Bitcoin and they didn't want to let it drop below this level, right? When I say they, I don't mean like a particular entity. I mean the market as a whole. So let me kind of back up a little bit and look at this. We can see that that zone, even being zoomed in, there was two reasons for a trade. But when you zoom out, you can also see that this zone had already shown itself to be demand in the past, right? So if we draw a box here, we can see that it did come down to this area before and bounce off of it. So once this threw that tail down and then closed on top of that, that to me is a signal to go long, okay? If you were more conservative, you might not have taken the long on that candle. You might have waited and said, I want to make sure this thing, is actually going to turn around. You might have waited for this candle here, right? Which again was another candle, kind of a spinning top type of candle. And it wasn't quite an inside bar, but it's pretty close. But these are all indecision candles, right? Spinning top, this one's a little questionable. This one would be, I don't even know what the name of half these things are. I don't care, right? I just know what they mean. I know what they signify. I guess this is like a doji or something. Again, it's kind of one of these funny things where when, like when I was doing software for a living, right? At one point in time, I had a mobile games company, and people were shocked when they found out I didn't know how to use iTunes. They're like, how do you have a mobile games company and you can't use iTunes? I'm like, because I outsource development and that's not my job. I do the marketing. I'm the idea guy, right? Kind of the same thing with trading. I don't care that much about what a pattern is called. I don't care what a candlestick is called. What I care about is knowing what the candlestick means, right? So when I see a candlestick like this, no, I don't actually know the name of it. I'd have to go Google what the name of this candle is. All I know is that there's a small wick on top, which means there wasn't a lot of sell pressure. There is a big tail on bottom, which means a lot of buyers stepped up. And to me, that's bullish, right? So anyway, this next candle comes down, tested that same zone here, right? The zone that was from back here, bounced right off of it. So again, you could even take a trade here. And ironically, you'd almost be better off waiting in this case. But again, it's a hindsight thing, right? You wouldn't know that it was going to have another one of these. It might have just shot straight up from there. So anyway, if somebody did take a trade there, their trade might have looked like this, right? Enter on the close of the right candle, stop loss at the bottom, about a 1% stop, meaning they could take a larger position, 2-to-1 risk reward, boom, there you go, right? Just like that. So there's lots of different ways to approach it. If you flip this upside down, watch this, and you see price moving up and putting in wicks, it's the exact opposite. It's the exact opposite because what's happening, sellers are stepping up more than buyers, and it's a sign it's going to move down. What you're really looking for, regardless of which way the market is moving, you don't want tails or wicks that are continually taken out, right? Because that's invalidating the idea of demand or supply. If you're putting in a tail, but then the next one goes lower, and the next one goes lower, et cetera, that's not demand, right? It's being eaten up. What you're looking for is price to kind of stall out, kind of like right here, what's happening right now. See how price came up, put in this little wick, doesn't mean a whole lot, but then it put in this bigger wick with this, almost like a inverted hammer type of candle, and then it put in another wick here. This is showing signs of weakness right here. Now, again, it doesn't mean that this thing is going to move down $10,000 today or tomorrow or anything like that. It's a smaller time frame. It's a 1-hour chart. What this means is I might want to start looking for a short position. Don't go out and take this trade. I'm not telling you to take trades. I don't do trade calls on YouTube. Okay, so no one take this trade and say, damn it, James, I lost money because of you. Or don't take it and say, hey, I made money because of you. No, you didn't. I'm just giving you an example of how trading works. I'm not telling you to take the trade. That's your business, not mine. All right, so somebody might take a trade on something like this and say, well, I'm going to be pretty aggressive. I'm going to get in here. I don't like this trade as much. Let's pull this down. As this one back here. Reason being is because this had already been moving sideways for 3 or 4 bars. Whereas up here, it's really just 1 bar. So this could easily be a pause before more upside. But if this moves, over here, another bar, another 2 bars, then I might be a little bit more interested in taking a short position. And it would look something like this, right? And again, I might even think this is going higher to 45,000, 43,000, whatever, and still be okay scalping a short, because if you look, this wouldn't be all that abnormal to have a move. It wouldn't be abnormal to have a move that came up like this came down, retested this area down here, and then kept moving up. That wouldn't be all that abnormal, okay? Not abnormal at all. So that's kind of how day trading works. You don't care so much about where the price is going on the big time frame. You're just getting in and out in these like 1, 2, 3, 4 hour trades, right? And then moving on. So the video is getting longer than I meant for it to be. I started explaining this stuff and I want to go deeper and deeper and deeper. So I end up rambling a bit. So what I'm going to do is I'm going to go ahead and wrap it there. The gist of this video really is watch for the tails. Watch for watch for sideways consolidation, and then start looking for the tails and wicks. If you're at the bottom of a move, what you're looking for is obviously tails, so that you can look for some type of reversal trade. If you're at the top of a move, then obviously you're going to be looking more for wicks, so that you can look for some type of short position and catch a quick scalp off of the short, right? And yes, this works on larger time frames as well, but we're not going to get into that in this particular video. All right, hope you guys enjoyed that. If you did, make sure you give it a thumbs up. Make sure you subscribe to the channel. And of course, don't forget, you can check the description for links where you can join my Patreon for just $7 a month. Also, where you can join Pancake Profits, which is a course where I teach you how to trade DeFi along with a former student who became a very successful trader, ended up being a market maker in FTX, ended up taking a test account in DeFi from $2,500 to over 100 grand in about 7 weeks. Just an absolutely amazing, all-star trader. So I'm going to go ahead and wrap the video up there. As always, this is James with Crypto Common Sense, reminding you to please trade safe.